Ladies and gentlemen, welcome to our podcast. My name is Isaac, mortgage broker from Equifirst Capital Financing. Beside me is Manan Law, managing partner of Equifirst Capital Financing. Today we're going to be talking about rental prices in Dubai, which is a super hot topic. Recent studies show that the rental prices have dramatically increased over the past year and are continuing on the rise. In this segment, we'll be talking about also if it's better for you to continue renting or switching over to becoming your own landlord and start building your portfolio. So, Manan, let's just give our audience a little breakdown of what actually happened over the past year and what's going to happen in the near future as well.
In the last year, if you start looking at rent and property prices, across the board, rentals have gone up by roughly 28%. Okay. Whereas property prices have moved up between 18 to 20%. This is on an average, obviously dependent on areas and
Of course.
so on, right? So what that actually is showing is your rent expense is moving faster than the asset is building value. Okay. Normally, in situations like this, people start looking towards um, owning an asset rather than renting it out because it's more cost effective for them. But you speak to far more clients than I do. What's been your experience when you're talking to them? What's the reason that people are actually converting over to buying a house now?
So, when I speak to the clients, first question is I ask is, are you investing or are you the end user of this property?
Hmm.
And majority of them are end users. They're fed up of paying high rent prices. And when we, you know, educate them on how easy it is to get a mortgage and how to actually start building your portfolio and start actually investing in yourself and in your family rather than paying somebody else's
Yeah.
debts and making somebody else more richer than you are. They start to become more easy at actually mortgaging and buying their own properties rather than continuing to rent and pay extortion prices
Yeah.
in today's market.
What's the reasons that they are looking to be homeowners rather than being tenants?
They're just fed up of paying really high rental prices. Um, they see where they started off renting a few years ago and where rental prices have actually drew them towards. It
Mhm.
doesn't make sense to continue renting and just blowing off their money on somebody else's debt and making somebody else richer. So what we do is we educate the client, see what their needs are, if they're an investor or an end user, and we try to help them capitalize the most in their actual income and help them build their portfolio and save them as much money as they can. Because at the end of the day, when you're investing in yourself, it's much of a better asset than paying somebody else's debt and making
Yeah.
somebody else richer.
Yeah, yeah. I mean, rent's an expense versus paying a mortgage is building an asset. Fair.
But I know you were speaking about this a couple of days ago about one of a conversation you had with your clients where they said, and I get this question asked a lot, almost every single day, is I'm going to wait off and see what the market does.
Does.
And if it does cool down, and then I'll take it from there. What would you advise your clients when you get that question asked to you?
See, when someone asks me the question of, and it's kind of linked, which is interest rates are very high right now. Should I buy a house now or should I wait? Okay. To me, it always goes back to the essence of why you're doing something. Is it an investment or is it an end use? Okay. They are two very separate ways of looking at the same asset. If it is an end use, your price sensitivity is less. You could buy a house, for example. You could buy a house for 3 million dirhams and now it's worth 4 million dirhams. You're less likely to sell it because it's your primary abode. It's the house that you're living in. If you sold it at 4 million, now you have to go find another house at pretty much the same price, which would be 4 million. So you've not really gained anything, right? So you're less sensitive to price movement. If prices go down, you also have the holding power to keep living in the house rather than selling the asset. As an investor, it is different because there, if I bought a house for 3 million and now it's worth 4 million, I am far more likely to pull the trigger to sell it, right? So whether I should buy a house right now or not is very dependent on what the answer to this question is, end use or investing, okay? It's also the fact that interest rates are at all-time high, and the trend for interest rates right now is that they are going to start going down. Ideally, they should you should be looking at a rate cut by the end of this year, beginning next year, depending how the elections go. Um, but you're not going to see a massive decrease in rates. You're not going to see rates go down as fast as they went up. So you're looking at maybe 0.25, maybe zero point 0.5 sort of a reduction. Okay. So if you're waiting for the rates to go down for you to start purchasing, your rates are only going down by 0.25 or zero point 0.5, whereas your property price will move up by like 3, 4, 5, 10%, right? So it always, if you're an end user specifically, if you're getting a house that you really like and you want to move into it right now, it makes more sense to buy it now rather than waiting for a marginal reduction in rates, which may or may not happen by the end of the year. That's how I deal with it. So whether it's an end use or an investment property, it becomes of paramount importance. But right now we were talking about rentals versus buying the asset, right? So if someone is looking to buy a 2 million dirham house, for example, right? What do the numbers actually look like? Because interest rates right now at all-time highs, and there is this common misconception that um, mortgage is way too expensive to take right now, and because of that, it's better to rent. So let's just go through that. What do the numbers actually look like if someone was going to buy a 2 million dirham house?
So a 2 million dirham house is more or less a two-bed apartment or a smaller townhouse. Average rent is about 10,000 dirhams per month, whereas mortgaging the same property would cost 9,820 to 9,850 per month, which is about a 2% gap, which makes it cheaper to actually mortgage than continue renting.
So it's basically at parity. I mean, a 2% delta is not much of a change, right? And then you, even if you add service charges, you're pretty much in the same ballpark, you're telling me, as if I was renting it versus owning it. The monthly expense, barring the down payment, is pretty much the same. And then if we start talking about where the market is headed and what is likely to happen or probable to happen, your mortgage rates are going to start going down. So effectively, your cost of borrowing is going down and your monthly installment is going down as you make payments towards the mortgage, and it's going towards your outstanding. Whereas on the other hand, your rental is not necessarily going to go down, right? Like, you always have that sort of Damocles hanging over your head that renewal time comes, and you know, maybe the rentals go up, maybe the landlord needs to kind of take the house or whatever. So even right now, with clients that I speak to, they're just so much happier and like pulling the trigger on buying the house rather than renting it. Buying the house also kind of hedges you for the future. It kind of makes you future proof, where if prices keep moving the way they are, you can still afford to live in the house that you've bought. Like, if you look at a lot of the villa communities where people have bought those houses, 2, 3 years ago. And I understand 2, 3 years ago was a completely different market. It was a global event that kind of led to everything. But people who bought houses for 3, 3.5 million are now, those same houses are worth like 7 to 8 million dirhams, right? So you're kind of protecting yourself that as property prices move up and you have that issue of rentals maybe moving up, if you take the plunge and buy the asset now, regardless of what the interest rates are right now, on an expense side, you're pretty much the same. What you're paying in rent over a 25-year period, the mortgage kind of adds up to being the same.
And also keep in mind with the new RERA calculator, a lot of tenants that were paying pre-COVID or COVID prices are starting to see the increase in rental prices, because with the new RERA calculator, it gives the landlords the possibility to start increasing rental prices to the current market prices as we are seeing in the city.
That's the whole essence of like kind of future proofing yourself. It leads to, obviously, between buying an asset and renting an asset, unless you have like a very short term view that you're only going to be in Dubai for like a year or 2 years and then you're going
But
to
who
leave.
stays only for a year or
But
two
that's the
years?
thing. There is so much change that has happened. Like, I've been in Dubai since December 2005, and it was always considered a very transient population. Like, you come here, you spend your 4 years, and then you go somewhere else. Like a very, like, running a presidency sort of a thing, right? A 4 year term, and then that's it. But with everything Dubai is done in terms of visas and just even just infrastructure on how companies are set up, allowing more access or allowing people to even own companies on the mainland without a local partner. All of this is done to actually get commerce and business in so people come and start putting roots here and start growing. Most of the people that I know now, they have spent north of like 8 to 10 years in Dubai, which was something that didn't, happen before. They have a very clear objective of wanting to hit 6 million people by 2026, and you can see this in all the actions that they are taking. In terms of like the new visa laws and like even with corporate tax and everything coming in, it's the idea of it's a far more regulated market than what it used to be, and that provides safety and comfort for people, right? Because now that people are investing money and it's a lot more end users than investors, it doesn't feel like a gamble. It doesn't feel like, oh, I'm going to put my money in and in 3 months I'm going to sell my property and move on. People are actually plowing roots now, or it's
And also, Dubai's plan in increasing its population and expanding is something else to look forward to and keep in mind. We're working side by side on a daily basis, and we're seeing the influx of applications and clients from Europe and USA transitioning and actually relocating here. Maybe you want to touch up on how easy it is for a new individual relocating to Dubai and getting a mortgage.
that's one of the lesser known facts right now. If you're a non let's look at it two ways. There's non-resident lending and there's someone who's just moving to Dubai, right? More and more, you're right, more and more interest is there from non-residents wanting to take a piece of Dubai because of just the sheer returns that the property side has shown in the last few years. Okay. Non-residents can get a mortgage. They get like 50 to 60% financing. So on like 1 million dirhams, they could get up to 600,000 dirhams of a loan. It's a fairly straightforward process. Um, but what to me is actually kind of the hidden gem is people who are relocating to Dubai. They When you move to Dubai, you're always under the impression by most people that you speak to that you need to spend 6 months. You need 6 months of income in Dubai. You need 6 months of salary
Credit
before you can
history.
credit history, all that stuff, right? Before you can even consider buying a house. And what most people then end up doing is they come here and then they figure, fine, let me rent for a year. Let me get a sense of what the city is, my neighborhood, and all that stuff. And then maybe I'll look at buying next year. Okay. And that decision is not coming from they want to get a sense of the city. That decision's actually coming from I can't get the financing to buy the house. But there are options available from people who were working in a salaried job outside of the UAE, and now they have moved to the UAE or they've been relocated by their company to the UAE. They can get a mortgage as soon as like 1 month, right? So then they don't have to spend the time trying to rent for a year. They can actually start looking at buying an asset right away and moving forward.
And the good thing about that is we assist from the start to the end. We guide the client on actually how to, apply for the mortgage, how to source the property. We're with them side by side till the actual transfer date. And I think if we touch a little bit more on relocating and how to help others, it'll
Yeah.
be an added value for us as mortgage brokers, the company, and as an added asset to the person that's actually relocating as well.
So one of the things is when you're moving into a new country, or even if you're looking to buy a new property, right? The question always comes up is who do you call first, the realtor or your mortgage broker, right? Most people end up saying, I'll call my realtor first, which is fair. A realtor will actually speak to you, understand your requirements, maybe show you a house or two. But eventually, he's going to turn you back to a mortgage advisor to start figuring out what it is that you're eligible for, what is the budget that you can actually kind of do or achieve.
Of course.
Um, So it always makes more sense to first speak to a mortgage advisor on any part of this journey, which is either you're looking to just buy a house and you've been living in Dubai for years, or you're just moving into Dubai. Your mortgage advisor is the one who's going to actually tell you what are the rules of the land, right? What it is that will make him eligible, what criteria have to be satisfied, and what is the maximum lending that he can do, because you cannot just get infinite lending. There are caps, there are central bank guidelines that have to be adhered to, right? So speaking to your mortgage broker and having a mortgage broker who's actually kind of with you through the whole process is extremely important, and it kind of for a lot of the times dictates how your customer journey is going to be and how happy or unhappy you're going to end up being by the end
And it
of the
doesn't make it
transfer.
as stressful as you think it is.
Yeah, no, 100%. I mean, we are in a service industry. Our work is to service a client's requirements, right? And that's one thing I'm actually very happy about how we do it in Equifirst Capital. We don't rate push. We don't kind of just go to a client and say, oh, this is the cheapest rate, just take this and move forward. Because I've heard you talk on the phone. I've heard all my brokers talk on the phone. We actually do take the time to kind of understand what is your requirement? Like, what are you trying to achieve? Because every conversation starts with, I want the cheapest rate, which is fair. You should get the most cost effective rate, but that bank may not necessarily meet all your objectives. So, our job pretty much becomes finding the right bank that meets your objectives, what you want out of your mortgage, and does it in a cost effective manner.
Which is very good, because the other thing is I wanted to add on this is when speaking to your mortgage broker, it's not just a one-time conversation. Pull you know mortgage, call it a day. It's a relationship building
It
type
is. I
of
mean, every client I speak to, I think I'm pretty much speaking to them like
as if we're
every other day.
investing.
Yeah, it's but like just the number of conversations, right? It's every other day, sometimes two, three times in a day. And this is not just being like, oh, the bank has a requirement. This is a lot of the times the clients just coming to us asking us questions like, hey, is it a good time to invest? Or, hey, look, I am looking at this property and this property, which one would you advise? Even things on like, how should I protect myself on the MOU? Now obviously we can't guide them on all of it, but the whole point of it is that constant engagement and that relationship is what actually kind of builds over time, right?
And the
And
strong team behind that client, which actually adds.
yeah, it makes them far more comfortable, even when they're talking to like sellers or agents or everything, when they are aware of what it is that they can or cannot do, right? Most people right now have no idea how much they're eligible for. They have no idea what they can or cannot achieve from a mortgage, right? They go under the hope and assumption that when they go see a property that I should be eligible, and most of the times that is, and you would have found this, most of the time that just comes from an idea that, well, I've been banking with the bank for the last decade,
Yes.
so they have to give me a mortgage.
Nope.
It doesn't work that way.
No, no.
The lending criteria are very, very different from just having a liability account, which is just a current account and you keeping your money in there, right? So once you've actually spoken to a mortgage broker, you know exactly what your limits are, you know exactly how much lending you can get. Then when you speak to a property advisor, or if you're talking to a seller, you know exactly how you can negotiate. You know exactly what is my upper limit, what is the thresholds I cannot
And if you could
pass.
maintain those payments on a monthly basis as well.
Exactly. Like you need to understand that there are valuations that happen, and um, valuations coming lower or higher are important. It's not just because a valuation comes higher that the bank will give you more money. No, your MOU matters. The DLD when you go to transfer matters. You can't just randomly start. And then one of the good things about what Dubai is doing, even on the real estate side, is it's just regulations. Like even in the last like few years, the number of rules and regulations, both just governing how mortgages are done and even how real estate is done, is just kind of leading to a more regulated market, which just buys investor confidence. That's the journey that you have to take.